Hello and welcome to This Week in Review. Nigel Farage is somewhere over America at this point in time, so we've invited Rob Marstrand, who's the editor of UK Independent Wealth, to review what's been going on this week. But before we get to that, I wanted to ask Rob what you make of my Gold Summit speech, because I've sent it to you in advance for your feedback.
Hi, everyone. Well, I think it's excellent. I mean, it looks at the history of gold and how it's performed in all sorts of different situations. And it looks at the issue of gold miners, which are, of course, one way to play a story of rising gold. And I think everyone should try to take a look.
What do you make of the key underlying argument? Do you agree with it or disagree? Because I think it's a fairly new or controversial way to look at when gold actually booms.
Well, I think you make a very good case. I don't want to give away too much at this point, but you do explain the sort of scenarios where gold goes up. And I think that's important for people to understand. It's maybe slightly counterintuitive, and certainly worth anyone who has any interest in gold having a think about.
So the topic that we wanted to look at in more detail in this week in review is the topic of inflation. We've been worrying about it and commenting on it for a while, but it seems like the rest of the financial media are catching on now and people are starting to get worried. Do you think they're going to be right? Do you still worry about inflation?
Well, I've been thinking a lot about inflation for the last few months. And I think it's safe to say probably in the last couple of weeks, my view is firming up actually that inflation is about to take off in a bigger way than maybe I was thinking before. And that's for a long list of reasons. I'm happy to go through those if you want me to.
Yeah, you've listed them in detail in your newsletter, UK Independent Wealth, in a recent update. It's actually gone out just a few moments ago as we're recording this. But there was a particular issue that you identified in that report, which you claim it's not new, but it hasn't been in the news cycle for a long time.
Yeah, well, I suspect the people who read Fortune and Freedom have seen quite a bit of commentary popping up in the mainstream media at the moment about inflation. And it's talking about things like rocketing commodity prices. So you've got, wheat, corn, soybeans, oil, iron ore, copper, all of those things, paper pulp, all of those things have rocketed in price over the last few months or year. You'll hear about how households have got high deposit balances at the moment because they couldn't spend anything during lockdown, but they've been receiving money from government and from their employers. You'll hear about how the Bank of England and other central banks are printing lots of money to stimulate the economy. You'll hear about how governments have lots of deficit spending, all this kind of stuff. Now that all, of course, is inflationary. Commodity prices go up, of course, the price of things goes up. Naturally, if people spend more money, you get generally higher inflation through what's called the velocity of money. It stimulates GDP. Government spends money, if central banks print money, that all is inflationary. But there's something that I write about which is coming back in the UK, and it's essentially lain dormant for a long time. And it's the way that banks create money, normal commercial banks, Lloyds, HSBC, Barclays, and so on. And I go into some detail on how that system works and why it hasn't worked for such a long time. We're talking over a decade. And it's a crucial point to understand, because if you add that into the mix, then yes, potentially we get quite a big uptick in inflation. And then the big question is, how does the Bank of England react? Do they do nothing? Do they do too little too late? Or do they clamp down on it and then we get a massive recession? So that's what we don't know. But the basic environment is ripe for inflation to really take off this year and going into future years.
We had one of the most important policymakers in the world, Janet Yellen, make some comments about interest rates and whether they'll catch up with inflation. And then she had to pedal back those comments. So can you take us through what happened there? Because I think it's a signal of the sorts of issues that are going to come into play in the next few years.
Yeah, well, I think, as far as I know, she was just giving a speech at some conference or meeting, not a public statement as such, but to a group of people, and it got leaked. And it was the slightest hint that interest rates might have to go up, and apparently the market didn't react very well. That said, I did read one detail. I think it was in the Financial Times that the market went down that day before her comment was reported. So I don't know if that's accurate, but it might be. Anyway, whether she made the comments before the market dropped in the US, particularly the Nasdaq 100, or whether it was afterwards, who knows? But it was enough of a worry that she immediately sort of started issuing statements or getting her people to brief the press that she didn't really mean it, sort of thing. So it's clear that they're very sensitive to any sort of suspicion that rates might go up in the US, given their extremely bubbly stock market at the moment.
So then the next question in all of this becomes, if inflation does start to emerge and if interest rates don't keep up, what performs well in terms of investments? You've been looking into that specifically, I know, and you've found some interesting things. So why don't you tell the readers what performs well during inflation?
Well, of course, we haven't actually had high inflation for a very, very long time, or rather, we've had a disinflationary period since the early 80s, so late 70s, early 80s. And that means that in the financial world, there are very few people around who were mature, experienced investors during the last inflationary period in the West, which was during the late 60s and the 70s. So, and that includes me, by the way. I shouldn't pretend I was around that long. But we need to, therefore, delve into our history and work out, well, what did all right back then? And often you'll hear, well, the stock market. If you have inflation, the stock market's the place to be. Now, the problem is, profits tend to go up in an inflationary environment because companies have to increase their prices to keep their profits up, and the profits grow with inflation. But the trouble is, if you start at an expensive level in the first place, the valuations, the PE ratios and such like go down. And what I found out is that actually most stocks did dreadfully during the early 70s, particularly in the US, where you can get information easily. So the stuff that did well was obviously gold. Gold and gold miners are a great place to be. And other precious metals. So sort of real things or businesses that are linked to producing real things that rocket in price. And then one or two, but very, very few sectors of the stock market that I've found so far, which did well during those inflationary periods and actually went up in real terms. So they not just preserved your wealth, but they went up and made you a profit and paid you a nice dividend and all the rest of it. And perhaps surprisingly, an area that doesn't seem to work very well is property, so owning homes, houses, flats. So people think that will go up during inflation, but actually what it does is it gets very volatile. From what I can see, it, broadly speaking, will preserve your wealth over the very long term, so let's say over 10 years, but it's not somewhere you're going to make lots of money as the inflation takes off. What you're actually if you look at the UK, let's say mortgage rates are at 2% now. If banks increase their lending rates on mortgages to an average of 4%, 6%, 8%, just imagine the monumental housing crash that would happen. So I'd say it's gold, other precious metals, gold miners especially, and one or two very niche areas of the stock market.
So if you are worried about inflation, you should be signing up to the Gold Summit. There'll be a link below this video to show you how to do so. It's free. All the videos will be free. So make sure you do sign up as soon as you can, because it's going to be starting within days of this video being released. Rob Marstrand, thanks very much for joining us.
Thank you, Nick.